Good morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. As expected, inflation in May was unchanged for the third straight month at 4.5%. However, this figure is still beyond the Bangko Central's annual target of 2 to 4% and quicker than the 2.1% reading in May of last year. Transportation inflation rose 16.5% year on year. That is slower from the 17.9% year on year print in April. Inflation for food also slowed down month on month to 4.6% from 4.8% in the month of April. In Metro Manila, inflation also slowed to 3.6% from 3.7% in April. BSP Governor Ben Diokno believes that inflation will ease to within the government's target by the second half of the year. He says they will consider the latest CPI reading during the Monetary Board policy meeting that's on June 24th. Diokno also says the BSP remains watchful of evolving economic conditions and notes that the risks to inflation are, quote, broadly balanced. Now, the national government's outstanding debt inched closer to 11 trillion pesos as of the end of April. That's after tapping the international debt market twice that month. The Treasury Bureau reported that the debt pile rose 2% to almost 11 trillion pesos in the month of April. That's after they issued more government securities here and abroad. That month's debt tally was 27.8% higher year on year from the 8.6 trillion pesos as of April 2020. Of the total, 71% of the debt portfolio came from domestic lenders, while 29% was from external sources. RCBC Chief Economist Mike Ricafort said the ballooning debt showed the need for the government to increase its borrowings to plug the widening budget gap. Now, official estimates show the government's debt stock could rise to 11.98 trillion pesos by the end of 2021. Quick peek on how the peso is moving just amid that fresh inflation figures for the month of May. You can see on my terminal a bit of strengthening. Actually, is 47.821 to the greenback. We had, of course, been breaching the 48 levels or closing in on that. Nevertheless, in the past few days, having weakened there. Nevertheless, let's take a quick peek at the open, especially at just the close of Wall Street overnight. First of all, you can see a bit of a pullback there. Nasdaq down by 1%, the S&P 500 down by 0.4%. But it's really the Chinese markets that we will be monitoring today, especially the Chinese trading. As you can see here, for the last print, they were still in the red. This, of course, as Biden signed an order amending a ban on the U.S. investments in Chinese companies. And this order has named 59 firms with ties to China's military or in the surveillance industry, including Huawei Technologies. So once moving on my terminal here, however, our Japan's Nikkei 225, that's down by 0.8%. And we're still waiting on how the movement will be going over in China. Let's open our own index here. Down below 6,800 after having steadied above that for a few days here, down by 0.3%, 6769.71. Now this comes as we've seen the main index for the past few days, 4 days of trade, at least this week, was up by 1.7% for the week. So do we still have room to go? This according to Chris Mangon of AAA Equities. The large cap property and holding firms were what really heavily weighed on the index. Now let's see if those are still the ones weighing the index down this morning. It does seem to be the case. Look at SM Prime. That's a big heavyweight on the index, down by 2.8%, together with Robinsons and Mega World. So still the same companies dragging that down. Another thing that Chris Mangon had mentioned is the Mondanisan listing, and I just want to show our viewers here how it is trading at 13.28. That's below its IPO price of 13 pesos and 50 centavos. And this, according to him, it had seen increased volatility, but it lost almost 6% yesterday, just until recovering to just 2.8% lower. He said that the massive valuation and lack of perceived immediate growth is driving some investors away, despite the fact that it is considered considered a stable and pandemic safe business. Now, one sector to be watching out for are the banks. Let's open that in my terminal here, down by 0.03% in the first 5 minutes of trade, with BDO and PNB the only ones in the green this morning. This is BSP Governor Ben Diokma said in his weekly press conference that the Monetary Board has actually approved an increase in the net open foreign exchange position limit for the bank. So this NOP is basically the assets and or liabilities in foreign currency. So that's going to be starting August 1st. That limit will be raised to the lower of 25% of qualifying capital, or $150 million. Right now, the limit is 20%. Now, this would take into account the increased participation in Forex transactions. Recall that this has not been raised since 2007. And Diokno has just mentioned that this higher open FX cap is in line with the assets of the banks that have been growing. And he did mention that this will be unbiased. So finally, quick check on the mining space. This is the MGB, the Mines and Geosciences Bureau, is saying it will be updating the mineral resources and reserves database on the state-owned mining assets in preparation for their sale. They're actually identifying a couple of mines here, like the Basay Mining Corporation in Negros and Marinduque Mining in Samar. Those were foreclosed, and they are looking at selling that in order to support government revenue. So this, according to Environment Secretary Roy Simatu, updating this for sale list will support the government revenue in preparation for the bidding and the sale of mining assets, for helping the economy recover from the COVID-19 pandemic. The mining and oil counter down by 0.8% this morning. Checking in on the other headlines, we're keeping our eyes on the country's approved foreign investments, declined by nearly a third in the first quarter. That's due to uncertainty over the pandemic. PSA's preliminary data showed foreign investment pledges slumped by almost 33% year-on-year to 19.5 billion pesos during the first 3 months of the year. This from the 29.1 billion pesos recorded in the same period of last year. This marked the fifth consecutive quarter of an annual decline in foreign investment pledges in the country. Now, should foreign and local commitments materialize, these projects are expected to generate over 23,000 jobs, 35% less than the 36,000 projected additional employment 1 year ago. The government counts investment pledges from 7 investment promotion agencies. That includes the PEZA, the Clark Development Corporation, and the Board of Investments. Now, the BIR received 1.4 million online tax returns on the 2020 income. That's between January and April. This accounts for almost 100% of all income tax returns. The Finance Department said majority of these ITRs were submitted online through BIR's electronic filing system, and only around 7,000 were filed manually. This year's tally is up 8.7% from the 1.3 million ITRs filed online last year. Now, year to date, the number of Filipinos settling their taxes online accounted for 24% of all the taxpayers. Last year, only 17% of all taxpayers used the electronic channels. The BIR aims to launch its internal revenue integrated system. That's a central tool to process taxpayers' information by the fourth quarter. With May inflation breaching the target but sitting just as expected, is the state of recovery increasingly more predictable? Here to chat with us, we have with us Dr. Luis Dumlao. He's the Dean of the Department of Economics at the Ateneo de Manila University. Good morning, Dean, and welcome to Businessworld Live.
Good morning. Good to be here.
Dean, quick reacts on that inflation print, 4.5%, widely expected here, but nevertheless in the same as our prior print. And you can see in the categories here, transport still up 16.5%, but that's better than what we saw in April. And the food situation seems to also be easing, but nevertheless, we are above the BSP's target. Is this showing you some signs of, demand-driven recovery, or is this still a worrying print when it comes to our supply side issues?
Well, you said it's 4.5%. It's the expected only because it is the median among economists. But me myself, I think that's a pleasant surprise. If you just think of the African swine fever, the inflation in meat was 20% last month, and it's expected to be 20% still this month, yeah, last May, and yet it was less than that. And in terms of the oil, uh, mid May, it was $31 per barrel, $30 per barrel, and now it's $60 per barrel, which is a 100% increase, and a 100% increase in the price of oil calculates to a pressure of 1.5% increase in inflation. And yet the inflation in transport is less than 20%. I anticipated to be more than 20%. In fact, I anticipated the inflation peaked at 4.7% in February. I was anticipating that it could easily peak this month again, but it did not. It's just 4.5%. So it's a quite pleasant surprise. Uh, what we see now is the tapering off of the pressure in terms of inflation of the meat. So it's now 16%, and we expect it to be less next month. Uh, this month, June on June, it's June last year, the price of oil was $40 per barrel, and right now it's about $60 per barrel. So that would be it's less than 100% increase. So that's like it's going to be a 50% increase, which basically goes to say that the pressure is tapering down. Uh, so from this point on, we expect inflation to go down. I know 4.5% is still something that's undesirable, but it is a pleasant surprise because it could have been worse.
Okay. Dean, but can you say that with inflation tapering down, especially in the oil story, does this not highlight the fact that our economy is not, the recovery is not underway? If our demand for transport, for example, or the oil prices are not spilling over into our demand for transport, to what extent can you say that, it's a healthy increase in inflation, which, for example, in the rest of the global markets or in the US, they're actually sort of welcoming that?
Well, it's you could call it a level effect. The fact that inflation bottomed in roundabout September of last year. In fact, inflation last May was 2.8%, I think. There's a saying, what goes up must come down. In this case, what goes down must go up.
Hmm.
So we had an abnormal low inflation last year because of what is referred to as, what Paul Krugman refers to as the Corona coma. That means all economies were put in a coma. It was induced in a coma to shut it down, just to beat the virus. And now it's just recovery. It's, what goes down must go up. And that's basically what's happening.
Can you say, you mentioned that it's going to be easing? Is that going to be the case even when the economy reopens?
Oh yeah, it will ease up, uh, but ease up not enough to the extent that the annual average is still going to be a more than 4% inflation, perhaps more 4.4 or 4.5% inflation average throughout the year, which is again it's still a pleasant surprise. It could have been worse, but ideally it should have been less.
Okay, let's talk about the Fed's and the possibility of so-called taper tantrum here. So far, they've said that they won't be, moving rates upwards despite the increased domestic activity, at least over in the U.S. and even global activity there. And Ben Diokno of the central bank has said we have a lot of tools in case the Fed tapers. How would that affect our own markets, especially since our interest rates are, at a record low, and if it becomes more attractive to do investments offshore in markets like the US, would that not, and we've already seen the FDIs decreasing, would that not bring some investments away from the country?
It will take out some of the hot money, and hot money, it stops there. Not the greenfield investment per se. Greenfield investment does not mean it's more insensitive to interest rates differences in across countries, but more than anything, it's the hot money that will go out.
Will the BSP be keeping in step this time with the Fed? Do you see the same trajectory of economic recovery? And maybe we are a little bit late, but will we be catching up with the rest of the world eventually? And will our rates need to catch up as well?
I'll take the word of Governor Jokno saying that what we have right now is good enough, and I think he said at least the last time I heard he says there is no need for the change in policy rates. Uh, Catching up with the rest of the world is kind of tricky. All econometric numbers are out right now because in the end it's all depends on logistics. As soon how far, how fast, how how well can we inoculate the rest of the population, and it's all that has nothing to do with econometrics. Unfortunately, all has to do with logistics.
Okay. Sir, can you comment on the FDIs? You did mention earlier on it's just the hot money that might be affected whenever we talk about rates and what's attractive to foreign investors. But we also see the FDIs still quite low, the FDI pledges at least. Tell us, is this linked to the number of cases, linked to the lockdowns, or is this a sustainable long-term trend that we see the number of pledges going to be lower and lower for a longer term period?
Well, the good news is that it has been low for several years. It
Okay.
has been like that always, it seems. And the bad news, it is low. So the fact that it has been low even before the pandemic compared to for example, our ASEAN partners, and it remains to be low right now. And we would like it to be higher. It's not a pleasant news to be saying that we have low investment, but the fact that it has been low all along and we're kind of still surviving, uh, it's kind of like we will just have to live with it, and we are able to live with it.
Okay. And finally, sir, before we let you go, just a comment on the government debt right now sitting at 11 trillion. It might be close to 12 trillion now by the end of the year. And they
Yeah.
are, pushing or at least almost now being pushed in Senate na the Bayanihan 3 bill. Although our economic managers are saying, wag na muna, it's not necessarily urgent. We still have the 2020-2021 budget to be rolling out here. Can we afford this new stimulus? They are looking for different sources of of financing this, from pogo taxes over to mining stakes. Is this something that needs to be pushed as quickly as possible?
Okay, so in terms of let's just speak of the debt right now. The debt right now is, as you said, is around 11 trillion pesos and will be probably be 12 trillion pesos. It's around about 50, in terms of GDP, that's 55, 56, 57% of the GDP. Uh, the IMF threshold before you are going to be in the watch list is about 60%. So we're close to that. But the controversial Reinhard Rugoff debt to GDP ratio, that is the debt to GDP ratio before it can affect growth, is around about 90%,
Okay.
and that is something that we are far from still.
Mhm.
Uh, the contribution, the distribution of our debt, it's mostly domestic. It's 6.6 trillion pesos. That's peso denominated. That's 37%. And we are still being able to outgrow that. There's a saying, you don't have to pay the debt, you just have to outgrow it. Uh,
Okay.
but so the domestic debt, that's something that's growing faster than our GDP growth. So we should watch over it. But the thing is, it is peso. We can always print peso. The dollar is actually, it's just 3.2 trillion pesos, and it's less than 20% of our GDP. So it's not something to be worried about just yet. When you speak about the bayanihan, uh, which is about 500 billion, again, it has nothing to do with economics. It has to do with logistics. And if we speak of logistics, it kind of doesn't make sense. It doesn't make sense at all. The fact that we haven't used up the Bayanihan 2 yet, and we haven't used up the budget for 2021. And here we are releasing more money as if we're
Mm.
releasing money that we cannot spend at all. So I know it's not economics. It has nothing to do. It's good or
Okay.
bad. It has to do with the fact that we're not able to logistically spend it. So I don't know why we're releasing that when the fact is we are not able to expedite the budget before that.
Okay, so good points there. It's not a matter of the amount of the fiscal stimulus or the amount of debt, but rather the rollout and being able to get this money directly into the pockets of consumers. So thank you so much for
Yes.
those insights. That was, of course, Dr. Luis Dumlao, the Dean of the Department of Economics at the Ateneo de Manila University.
Thank you.
And that's the first look into the business day. Today is Friday, June 4th, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.